Hey guys, welcome back to the channel. In today's video, I'm going to be providing a long-term market update for Bitcoin, and I'll be diving into the MACD, the Moving Average Convergence Divergence Indicator. And we're going to be discussing the bullish cross on this indicator. We did a video when we first got that cross back a few months ago, but since a lot has unfolded since then, I thought it would be a good idea to give an update on where we stand with this indicator and also look back at some historical crosses so that we can get a good feel and a good idea of why this indicator might be useful. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, I will leave a link to my Twitter page in the description below. Feel free to go ahead and check that out too. I am fairly active over there as well. So the MACD is a great indicator that does a good job at identifying the momentum shifts of an asset by looking at the convergence and divergence of moving averages. And so this indicator has two lines, the blue line and the orange line. The blue line is called the MACD line, and then the orange line is called the signal line. So we're looking at the cross of these two lines, and that can either be a bearish or a bullish signal, but either cross represents momentum is starting to slow down and reverse. So when the blue line, the MACD line, crosses above the orange line, that means the bearish momentum is starting to reverse, and that gives us a bullish signal. And we had that cross back here in the middle of August, and around this time frame, we talked about the implications of the cross. We looked at its historical value, and we even pointed out the peaks in which we did have a cross at the top, the bearish cross, where instead the blue line, the MACD line, crossed under it. So we basically talked about how this was a reverse signal of what we saw at the top, where we basically had that trend start to shift in the opposite direction. And since then, you can see we have come back down and formed lower lows. But what I want to focus on is the fact that the MACD line has not come back and crossed back below the signal line. So even though we did form a lower low by about 10 to 15%, the MACD is still showing us that we do have the momentum of this downtrend starting to shift, and it's really playing out here in which we haven't seen that line come back below it. And we've seen fake outs before where we have had that cross back under it. And for example, if we go back here to April and March, that actually did happen in which we did have a fake out on the MACD. But again, this time around, that has not played out. And what I want to do now is just focus on the historical value of this indicator and look back to previous bear markets so we can just look at what happened back in those previous cycles. So I'm going to switch over here to the cycle from 2018 first, and I want to focus on this cross on the MACD where basically we saw that MACD line, the blue line, come back up, cross over the signal line in February of 2019. And that actually did mark a period that was a pretty good accumulation zone for Bitcoin. And if we take a measured move, that corresponded to about 17% off the lows 9 weeks after the bottom was in. So this actually did a great job at identifying when the bear market momentum really started to shift, really started to reverse back to the upside. And that did have a great sign of a longer term inflection point. And then beyond that, if we scroll over here to the 2015 bear market, we can see that the MACD also had a cross right here in February of 2015. And similar to the 2018 cross, this one actually occurred also after the bottom was in. And if we take a measured move, this was about 58% off the lows 6 weeks after the bottom was in. But what's important to note here is that even though we did have a retest of those lows several months later in August of 2015, the bear market momentum really started to shift. We could argue that, yes, from that point when that did cross, you saw a negative ROI, a maximum negative ROI of 38%, but that still didn't stop the momentum from really reversing here. And if we just take a curve, you can see that pattern where it basically had a nice rounding off base, and we had the momentum shift back to the upside with this point on the MACD cross marking a longer term inflection point. So scrolling over here today, knowing what we do about the MACD line and the cross that we saw back here, there's still a very valid bullish argument with this indicator because we really haven't seen any invalidation. We haven't seen the MACD line cross back under this. We haven't seen that momentum even starting to reverse back to the downside, where yes, we did make a lower low, but do consider the fact that from this point, it took about 21 weeks to make another low by only 10%. And if you just contrast that to the earlier stages of the bear market, right here we had a low in January, and then it only took about 15 weeks to go down 23% from that low. And then the momentum from there really started to kick up again in which we made a lower low by 32% more in just the next 5 weeks. So the rate of change to the downside in this portion of the bear market was much steeper. We had a much stronger bearish trend over here, and that's what this indicator is trying to get at. We're no longer seeing that very harsh decline over a very short amount of time. And this argument of the relative amount of selling and that relative decline is greatly supported by the RSI, the Relative Strength Index, that really showed a low on the RSI all the way back here during these June lows. So even though we have formed that lower low, I would still say that the MACD is a valid indicator with this bullish case, and that would get invalidated if we do see the MACD line cross back under the signal line. And if that does happen, I will provide an updated video. But until that happens, or even if that happens, I'm still going to be standing by this indicator and the fact that it does look like the momentum is beginning to slow down on the longer term bear trend. So I hope you guys do enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I'll leave a link to that in the description below. As always, I hope you guys enjoyed, and I'll see you in the next one.